I got to say, I actually think that Jerome Powell did a pretty good job given the very tight spot that the Fed is in. And let me preface all this by saying that I personally think the Fed should pause. In fact, I think it should have paused a while ago to wait and see the impact of the lag effects of all the aggressive tightening and rate hikes that it's done over the past year. But I didn't think they were going to, given guidance that Jerome Powell had given. And as we've all said, that the Fed is sort of playing for its credibility here. He said the things that he needed to say. I mean, one, he reiterated many times that the Fed's priority is still bringing inflation under control. He is still guiding to a 2% inflation. We can talk about whether we think the Fed will actually be successful in that, but some people have been saying that the Fed was going to maybe begin to walk back its inflation targeting and maybe start raising it, maybe up towards 3%. Powell is not giving any indication he's willing to do that yet. While they did raise the Fed funds rate by another 25 basis points, Powell did say that the Fed was going to be much more data dependent going forward, and he didn't commit to doing another rate hike at the next meeting. He basically said that the Fed was already kind of trying to wind down its hikes, and that given the recent fears about the banking system, the Fed is seeing that banks are going to be tightening their lending conditions even further based upon those concerns, and that tightening of lending conditions is actually going to act like additional Fed rate hikes. And he doesn't know exactly what the magnitude of that's going to be, but essentially what he implied is that we're going to be getting more than 25 basis points worth of tightening out of the environment now, because the Fed is doing 25 itself, but then you're going to have the additional impact of these tightening lending standards. So he's basically saying we're going to monitor and assess. So rather than committing to yet another rate hike, he said we're going to wait up until next week's the next Fed meeting, and then we're only going to decide then whether another hike is merited or not. When asked if he was going to start cutting rates, he said, nope, not in our plan at all. It's not in our base case. The market, during the presser, one of the reporters asked, hey, the market is basically pricing Fed rate cuts starting in summer for the rest of the year. What do you have to say about that, Powell? And he just said, well, that's what the market thinks. That's not what my plan is. So if he is really trying to wring optimism for a Fed put out of the market, that is the message he's got to tell. The other thing I think he did well, too, is handled the questions about the banking system, where he basically said, look, banking system's sound, nobody should worry. Of course, that's his job to say that, but he's basically said, look, we will guarantee that depositors shouldn't have to worry about their deposits. And so if other things start breaking in the banking system, you can believe we'll step in with swift emergency measures like we just did for Silicon Valley Bank and Signature Bank. He was pressed as to whether he was guaranteeing now all deposits, insured and uninsured, at all U.S. banks. He played coy there, but he basically just sort of said, hey, look, we're going to do whatever it takes. So, his job is to make sure that depositors feel that their funds are safe enough in the banking system, that they're not running in fear to potentially create additional bank runs running through the system.
It's clear that there's some nervousness about the system that they've created, or the system that they've pushed to this extreme, and I don't think that Silicon Valley Bank and the other banks that you mentioned are going to be the end of the story. There's never just one problem, never just one cockroach, so to speak. And it really is the result of a system pushed this far for this long. The Fed talked about inflation. They remain committed to 2% inflation. We'll see. Powell's trying to talk a tough game and saying he's committed, but we were at 0 for years on inflation, and then we shot right to 9%. I don't know why we think that they can fine tune this like this with this many variables stretched to the limit in the system, all amidst a moment of hyper overvaluation in all of the markets, a stock market that absolutely has to be supported by the Fed and managed, or else the whole system really suffers. A lot of game theorizing going on here, but the big picture is that the markets are at a critical juncture. They remain hyper overvalued, and technically they've been looking weak. We just had a 70-point reversal in the S&P from high to low. As we speak here on Thursday, the market was really strong, gapped up the other day, but it's been having trouble really making progress and pushing through to the upside. So amidst daily moves of 50 S&P points almost every day and in opposite directions, the market seems very undecided and is technically in a dangerous spot.
One of the things that Powell didn't talk about this time around, that he's actually talked a lot about at the previous press conference, was the lag effect. Powell, I think prudently was telling people, hey, there's a lag effect to our policy, and that's why we're going to pause at some point, right? Because we want to give that policy the repercussions of those rate hikes that we've made in the past to catch up to us, to see if they're enough to bring inflation under control, or if we're going to need more. As we've been talking about a lot on this channel, there's a danger that the Fed may have actually already over-tightened, right? That we have maybe done too much in terms of rate hikes, and then with the additional quantitative tightening going on, that as those waves of the impact of previous rate hikes begin to really hit, that we may find out that the Fed did too much, but it's too late to do anything about it, because you have these shock waves traveling through time and continuing to sort of slam into the economy here. Interestingly, Powell didn't talk about them all that much, which I feel is maybe an error, because as we've talked about recently on this channel again, it's just recently that we're really feeling the impacts of the first rate hikes that were done back in March of last year.